You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we're going to be taking a deeper dive into real-time and instant payments. We've got, at long last, some data from the Federal Reserve about the volumes that are running through the FedNow program. And we've got a great interview with the latest QSO that's actually focused on bringing instant payments into the credit union world. We'll be speaking with Manal Gupta, who is an EVP at Star One Credit Union out in Silicon Valley, as well as Keith Riddle, the GM of Payfinia QSO, which has recently been established as a standalone unit as part of Typhone, where they originally did work with Star One, bringing real-time payments via FedNow into the market. They were one of the first adopters of the FedNow system, and they've got some interesting stuff going on that I think is really helpful to understand where we're going with the space, because there's a lot going on. As always, I'll remind you, you can find out more about the Best Innovation Group by checking out our website, big-fintech.com. And this week, let me remind you, it's your last chance. I shouldn't say your last chance. It's our last digital town hall episode, the CU Town Hall, coming up. If you're listening to this right as we're posting it, you've still got a chance to join us live on Wednesday, December 11th. That happens at noon Pacific, 3 o'clock Eastern time. That is a live, roughly hour-long session where we get together with a bunch of credit union leaders and really talk through the most important issues that are facing credit unions these days. This is our year-end edition, and therefore we are going to really be kind of looking back at what's happened over the course of the year, and more importantly, what we could expect to see going forward given the events of the election in November and what looks like a pretty significant sea change in the regulatory environment along a broad spectrum between Bitcoin, cryptocurrency, the CFPB, et cetera, et cetera. Hope you'll join us. You can check us out at thecutownhall.com. It is free to join, but you do need to register in advance. And if you don't hear this in time, you can always check out that website, and we will have a replay available from the session, as well as past sessions. As I said, we've got some new information about the status. We've known for some time, as you probably remember, the FedNow instant payment service hit its one-year anniversary in July. They're still a relative new player on the block. The RTP system, coming from the clearinghouse, actually had a birthday itself in just this last month in November. They hit the 7-year mark in market. So we're obviously dealing with two different solutions at relatively different stages of life. But we've been waiting for some time. The Fed has not been very forthcoming in terms of the amount of volume and the other operating statistics around their system. They finally released those just over the course of the last couple of weeks. So let's take a quick look at that before we jump into this interview. Well, first off, something we did know, the Fed has actually already surpassed RTP in terms of the number of financial institutions on their system. They've reached the 1,000 mark already. Those are much smaller institutions than the large ones, which also happen to be the owners of RTP in the clearinghouse. But the volumes tell a very different story, and this is what just came out. In the September quarter, ending September 30th, over the 3-month, 90-day period, FedNow processed 336,000 payments for an overall settlement of $17 billion. RTP, again, for perspective, they've been in market 7 years. I don't know if you went back and looked at the first, what this would have been, I guess the September quarter would have been the 5th quarter in operations for the FedNow. So if you went back, I don't know if I'd say fair comparison, but going back to the 5th quarter RTP was in operations, they would obviously have had lower volume. Nonetheless, let's take a look. In the month of October alone, so I'm comparing a 30-day period for RTP versus 90 days for FedNow, RTP processed 32 million payments compared to 336,000 for FedNow. Pretty significant difference. Here's the part that I find a little bit even more interesting, though. RTP in the month of October processed about $26 billion. the Fed processed 17 billion over the 90-day period. So here we're getting a little bit closer, about a 5-to-1 difference or something like that. What that says, if you do the math, which is interesting, is the Fed's average payment was $52,000. RTP's was $800. Again, that's what, about a 60-fold, 65-fold difference. Not entirely sure what to make of that. We know that overall volumes have been heavier on the B2B side in instant payments, but that's true on RTP as well. What I think you're going to find is RTP is enabling Zelle. So I think there's a lot more consumer, smaller transaction, and also consumer A-to-A payments, which are still larger, but not as big as some of the B2B payments. So some significant differences there. Also really, really strong scaling on the FedNow side. They've been doubling quarter over quarter, 2 of the last 3 quarters in terms of size, and that transaction dollar volume has grown even faster than that. So, there look like there's some different use cases going on there as well. Another obvious difference, FedNow is limited to a 500,000 transaction limit, $500,000, whereas RTP has been at 1 million. And kind of in a take that moment, you got kind of a Hatfields and McCoys thing going on between these two. RTP is now moving to a $10 million transaction limit in February. It's interesting that the Fed's average transaction is already larger. So exactly what that's going to mean will be interesting. Another piece of information the Fed just recently put out is they disclosed that their projected cost of operating FedNow for the current year, 2024, was $245 million. Now, again, that's not to be overly surprising. There's startup costs. They also talked about $100 million of startup costs in 2023. But again, nonetheless, if you do the math, if you take a look, they're probably on track right now to process a little bit over 1 million payments over the course of 2024. Do the math, not too hard. That means that's about $245 per payment that it's costing them. The pricing of it is 4.5 cents. Kind of eye-popping there. Now, as I say, that's going to change pretty quickly. They have a mandate. They're supposed to do cost recapture within 10 years, so that could get interesting. If you do the math again, and if they can hold their costs where they are today, they'd need to be doing about the volume equivalent to maybe 1/5 of our overall ACH volume to break even. That's going to be a fun one to watch. I think they've got some disclosure requirements coming up there, and we'll be watching that one as well. But this is obviously still early days in this area, but interesting food for thought. And in that direction, talking about the way this is evolving, our conversation with Minal Gupta and Keith Riddle. Minal is at Star One Credit Union, which is out in Silicon Valley, and they teeter right around the 10 billion range. Again, they're just right on the cusp of the top 20 credit unions in the country. They were one of the first, if not, I think they do take credit for making the first FedNow transaction back when it launched in January of 2023. And they've been working with Typhone from the beginning. Payfinia QSO, and this is, again, Star One has invested in the Payfinia QSO, turning it into a QSO by definition. And they're putting the platform together to try to bring the solution out to more credit unions. So we got Minal Gupta, who I've spoken to before for an interview article I did for Credit Union Magazine. And Keith is a friend. We've been in touch for some time talking about these things. So when they launched their QSO, it seemed like a great time to check in with both of them, exactly see how all of this is progressing. Let's have a listen. I'm here with Minal Gupta, the Executive Vice President of Operations for Star One Credit Union out in Silicon Valley, and Keith Riddle, the General Manager of the Payfinia QSO, newly launched over the course of the last, still less than a month ago, right, Keith?
That's correct.
Yes, we'll get in a little bit of that story as well, but thanks to both of you for taking the time to talk today.
A pleasure.
Minal, you and I spoke actually for an article in Credit Union Magazine back in early to mid 2023, just as FedNow was launching. Can you remind me, or just recap for folks, that Star One really wanted to be early in the process, one of the fast follow, not even a fast follower, an early adopter, in terms of starting off on the front lines of the FedNow rollout. Can you talk about why that was important to Star One?
Absolutely, Glenn. I think one of our biggest strategic initiatives at Star One has been payment space. We're located in the Silicon Valley, where our members like to move money yesterday. Our members are in the high-tech space. They want to have access to their funds at the palm of their hands. So being innovative, providing solutions that cater to our audience has been a critical part of our strategic plan. As that rolls out, what we had decided is that we wanted to really provide real-time payment solutions from the beginning. When RTP first launched, we didn't specifically go that route. We felt the process was cumbersome back in 2027. A lot has changed since then. When the FedNow was first introduced, we realized that the partnership that we already have with the Federal Reserve, plus having Typhone by our side at that particular time, now Payfinia, really made it almost a no-brainer decision for us to go live with FedNow to really cater to our membership. And at that particular time, fraud was also on top of our mind, which the Typhone team really delivered on designing a solution that would cater to our members with giving our credit union a peace of mind by mitigating fraud solutions.
Now, you've mentioned Typhone a couple of times, just to make sure that everybody's clear. So Typhone has been, you've been working with Typhone and the Infidia platform for some time at Star One, correct?
That is correct. Typhone has been our digital banking provider for a very long time. We have them for our mobile banking as well as our online banking. So it was a trusted partner that we've worked with. It has proven success in the past. So we went with Typhone to help us design FedNow.
So Keith, can you explain a little bit then? So at the time that you went live back in 2023, it was still obviously part of Typhone because the Payfinia QSO hadn't actually launched yet. Yeah, and clearly that this was the first, Star One was your first implementation on real-time payments, given that that was the first one out of the gate at FedNow. How did the relationship kind of come to be?
Yeah, so the relationship, as Manal indicated, had been longstanding in terms of digital innovation and digital banking support for their members, which are very progressive and wanted to take advantage of next generation money movement solutions, as Manal again has indicated. So basically, as part of the collaboration, all the necessary components were available to take advantage of innovation from a payments modernization perspective. So let me explain that a little bit. So when we met with the Star One team and started the collaboration, obviously one of the foundational aspects of that as Typhone is the user experience layer, and that there are a significant portfolio of Star One members accessing that mobile experience or the online experience on a daily basis. And they want to be able to have the freedom to move money at their leisure and at their desired speed to take advantage of conveniences and aspects they want that transaction to settle externally. So part of that was working through the collaboration of what was the workflow that most of the members were following today to do account-to-account transfers. I'm moving money from my Star One checking account to an external account. And obviously that's traditionally been on a same-day ACH type of transaction, which has its benefits in that you're able to do that in the same day, but it also has some challenges for someone who may want to have that the funds delivered immediately. So that was the foundation for starting the collaboration for instant payment support, leveraging the user experience, looking at the workflow that the members from Star One traditionally follow for initiating an account-to-account transfer transaction, and introducing, as part of that, an instant account-to-account workflow within the existing digital experience platform. So they could take advantage of, if they know they wanted to do something instantly, great. If they were in the same day ACH workflow, that it would actually easily present to them in a very non-intrusive way that they could deliver this transaction instantly if they preferred to, instead of same day ACH, if it's an eligible endpoint that's on the FedNow service. So that way that member could take advantage of that and not have to go out of that workflow to another workflow and disrupt their experience for the credit union. So a lot of it with the foundation was the workflow. What is the member experience, the desired member experience to support instant payments? So
Manal, can you tell me, I mean, just, trying to get a perspective of your typical member, obviously you're sitting in Silicon Valley. Do you think that this kind of is understood more broadly among the broader population, or do you have specific kind of field of membership kind of legacy? Are you working heavily with, tech employees with some of the major players? How much do they kind of understand or get into the weeds of these payment kind of processes?
I think so. Our membership, all they care about Glenn, is they want to have the ability to push a button and make their money move from one institution to another institution, whether they're in the tech business, which they are, or they're just simply, in any other type of industry. Our members, what we've designed, which Keith alluded to, is so beautiful that members don't really have to think. Our same-day ACH product was something that they were used to using prior to instant payment solution through FedNow. So our members were used to going there for that specific experience already. What we did, to Keith's point, is we just added instant payment right in that same flow.
Okay.
So now our members who already have gone there to transfer money, a pop-up appears saying, wait a minute, instead of sending this money to same day, do you want us to send this instantly? Now what we've done is we've enhanced that member experience by saying, instead of sending it the same day, I can send this money, member, for you right this second. So all the member had to do was hit yes.
And is that an additional fee, or is that at the same price point? Or is
We
it
don't-
part of the service?
It's part of the service.
Okay.
We
So
as
why wouldn't you? I guess is what it comes down to.
You got it. Why wouldn't you, right? So all we did is we enhanced that member experience, because members don't care whether the money's moving through RTP, FedNow, ACH. All they want to know is my money is moving when I want it to move. And that's what we provide.
So fast forward to the present day, about a year after, about 15 months now, I guess, after launch of same day, or I'm sorry, of FedNow. And now we're launching a QSO. Manal, what was the thought process? Was this kind of always part of the playbook, or when did it kind of become part of the process and the conversation to actually invest in Payfinia?
Yeah. So we had initially had some conversations around wanting to build a QSO and invest in a QSO. But the reason for building a QSO is we at Star One believe that we're in the business, in the credit union space, for people helping people. And we want to assist other credit unions have the same experience that we had at Star One. And what better way to do this by besides having, an opportunity to build a QSO that provides the same service that we experienced. We had the opportunity to speak with several credit unions prior to QSO being established in the industry through Federal Reserve. And one of the biggest points that consumers, that members are actually expressing to credit unions is that they want their money moving as safely as possible. So credit unions, their biggest concern was, I want to make sure if I offer real-time payment solutions, is it going to minimize fraud? Is it going to cause fraud to the credit union and my members? And that was the biggest barrier for credit unions in the industry to want to explore FedNow. And additional barriers that we heard in the industry were around core. Is it core agnostic? Is it going to really fit into the core that we have? And is the process to launch FedNow and having that project done a cumbersome process? These were daunting barriers for credit unions in the space, so they've shied away from actually wanting to offer real-time payment solutions to their members. But Payfinia's solution addresses all three. It actually plugs into any core. The fraud mitigation tools that are designed, we are a proven use case where we've experienced the least amount of fraud through this particular channel than any of our other channels out there. And not to mention that the launch process with the Federal Reserve support, along with Payfinia support, has really made this an extremely smooth process to launch. And it is cost effective. So I think that those solutions, those benefactors, or those, the things that we believe were so crucial, we want to make sure that others are able to experience the same benefits in the industry. So we wanted to be the first to experience this, and then it'd be an honor to provide the similar experience to other credit unions who may find this an unattainable goal.
Yeah, I mean, it sounds almost like a referenceable customer on steroids. I'm remembering that old TV commercial. I like the company. I like the product so much, I bought the company. Well,
Yeah.
in this
You
case, you kind of carved off a piece of the company. Keith, was that the same? How early in the process did it kind of become clear that this might be the QSO model kind of germinating, or was that something that Typhone had to really kind of take back and think about?
No, I think it was always part of the initial strategy, as Manal indicated. So I think the benefit is that we were able to incubate as Payfinia under the Typhone framework through the user experience aspects we built in collaboration with Star One, through the enablement of an open payment platform that's cloud-based, API enabled, using open banking type of standards for communicating with external parties, whether it's a core or digital banking platform or a fintech, and building out all of those layered fraud controls that Binal also referenced were very critical because of them, A, starting in send, and that being one of the most critical points of friction for most financial institutions to really pursue the value proposition of allowing their members to send payments or sending payments as a financial institution. So I think it was always part of the initial strategy in terms of how that would be separated from Typhone for the betterment not only of the industry and creating that framework that's decoupled from digital banking and decoupled from the core, but also providing those credit unions that wanted to have a vested stake in that payments modernization and innovation to do so through a QSO structure. So it became the best of both worlds. We have a lot of technological experience as part of a digital banking provider and serving 100 plus financial institutions that we applied to the payment framework, but also an open environment where we want the industry to have an opportunity to benefit from this ongoing payments modernization and instant payments being at the foundation of that.
Yeah, if it's not clear already, one of the things that not only was Star One kind of first to the table on FedNow overall, but you remain kind of in the minority, Manal, as a send institution. So you're actually making the payments. And as you've said, and I can get into this a bit too, you've alluded to it, that's the big concern a lot of people have is the fraud exposure when you're capable of sending. But that's also, to me, one of the interesting little kind of anecdotes is as you launch the QSO, the funding mechanism was to actually make the payments through the IPX platform, Instant Payments Exchange. Keith, was that always the name of the product, or is that kind of the go-to-market name now that you're actually launching it with additional clients?
I think it was the go-to-market name that was anticipated that was going to be released in that process as part of Payfinia and the brand being released to the marketplace even prior to the QSO being announced. So that's been in place for at least the last year, nearly year or so, in terms of positioning of the Instant Payment Exchange as a platform.
And I guess that was almost a good proof of concept, as I understand it, the way you actually funded through a series of transactions that actually showed that you could, apply dynamic, fraud controls, dynamic settings in terms of payment mechanism. Can you talk a bit about exactly how that worked?
Absolutely. So, and Manal can certainly talk about on the sending side how that was managed within the credit union. But what we wanted to do, to use your phrase, I believe you positioned earlier, is consuming our own aspects in terms of the product and platform functionality to fund the Payfinia QSO through a series of instant payment transactions that traverse through the FedNow service, leveraging the Typhone Infinia digital banking platform and user profiles that we manage dynamically as part of that process to test the fraud mitigation, to look at the maximum transaction amounts, to set that profile fluidly so the transactions could occur, to prove out the fact that it could be something that supported transactions up to the maximum of the FedNow service transaction limit, and then resetting that fluidly or dynamically back to a level that more complied with what would be a standard user in the platform. So it was a great validation of a variety of items, but in a matter of 15 to 20 minutes, we facilitated all those workflows, including the tests of gearing up the limit and then gearing down the limit and having all those transactions flow through. And the Payfinia QSO was fully funded, settled, and reconciled in a matter of that time. And I think the institution that supports our business account was very impressed in the overall process as well. So it was a great testament to certainly Star One's commitment, the use case of B2B, and the funding aspects. And I think it helps folks to imagine all the opportunities for streamlining payment remittance.
It's 500,000 is the maximum size of a transaction.
It's the current limit for the FedNow servers, yes.
I'm smiling right now because I just realized it was just last week, I believe, that the Fed finally released some data about volume, both dollar flow and transactions. And there seemed to be a pretty significant spike in the last couple of weeks. And I think we may have the source of exactly where that additional.
We may have had a little part in that, but we're not the sole part of it. Yeah.
So, Manal, can you talk a little bit more? I mean, just in terms of advice to go, you already talked about, the desire to help other institutions go to market, and particularly move onto the send side. And obviously, the fraud controls are built in here, but what is it that kind of gets you to the comfort level that the fraud mitigation is in place?
I think, one advice that I would give to those that are looking to go live is don't be afraid to take some risks. We in the financial industry are in the business of taking risks. And if you actually don't offer real-time payment solutions, you will fall behind. Industry is moving forward. We just as a nation are moving much more forward and progressive than we ever have been in terms of offering payments options to our consumers out there. So if you don't take the risk, if you don't put yourself out there and try different solutions that really cater to your consumers, they will go elsewhere. Now, we talked about fraud mitigation tools. Payfinia QSO is one of the only QSOs out there that offers a solution with all the fraud mitigation tools built into it. But work with a provider that really, like Payfinia, that can educate you and really understand what are your main pain points. Is it core? Is it fraud mitigation tool? Or are you just worried simply about the launch process? And so understand your own pain points and really tackle each one of them. Because I think, if we could launch Payfinias through Payfinia QSO, and we don't, we are actually a credit union that runs very lean. I think anyone can. Yes, we are, a big size credit union, but we had the help of the Federal Reserve and Payfinia, who really actually stood by us to not just launch the FedNow solution, but they actually helped us design the use cases, really stood by our side to make sure that it was a successful launch for all of our membership. So I think one of the biggest advice, again, to come back to is don't be afraid to take the risk. I guess that's what I would say out there.
And Keith, I forget if we talked about this before, but next things on the horizon for Payfinia, you're also going to be going live with RTP, so you have both sides of the different solutions on instant payments will be in place by early 2025, I believe. And if there is still some hesitancy, you can actually set lower transaction limits on an FI by FI basis.
Oh, absolutely. So the answer to your first question, yes, we're going to be enabling the RTP network by the end of the first quarter of 2025 to expand the reach of what we provide in terms of instant payment support. In terms of the fraud mitigation, yes, the limit or set of limits and the layer controls are very dynamic per credit union, and we're actually going to be introducing user profiles within our fraud mitigation tool so that information that's coming from a core or from an external source that says Keith Riddle is a member type 1 and some other member is a member type 2, then you'll be able to apply those limits in more of a profile environment so you don't have to go through and necessarily establish all those things manually. And that's very important as credit unions start to look at the unique aspects they may want to do in terms of their member segmentation, from a starter member to maybe those that are more in your private wealth management group.
So if I'm hearing that correctly, I mean, if somebody's still a little bit kind of leery of the whole idea of the exposure, $500,000 transactions, they can roll this out 1,000, 5,000, something like that.
Absolutely.
And then
you don't have to go to that maximum. That's just the maximum transaction limit supported on a per transaction basis on the network, because the RTP network has a limit of $1 million per transaction.
But then even on top of that, if they choose, like you say, if it's a business account, you can, after it's a very well vetted business, you might move it up to 25, 50,000 or whatever, but you can still keep it for some consumers and things like that for their protection as well as your own at, something in the, the 1,000, 5,000 range or something like that.
Absolutely. And there are aspects within our platform also called cool-off periods, which allow for lower limits to be administered based upon a timeline the credit union would set for adding a new payee or just coming into the service. And we're even going to be introducing aspects based upon trusted and untrusted devices that leverage some tools we're building into the Infinia platform for silent device authentication. So the fraud mitigation never remains static. You're always expanding those horizons of which you're consuming data, either third-party services or introducing aspects into your platform. The other thing we're doing, just to note how we can help institutions start their instant payments journey. We often know they're going to start with a receive scenario because that helps them to introduce instant payments into their environment. We are finding more looking at fast follow to send for their members if they aren't in the same category as Star One and wanting to introduce that initially, if they're a Typhone client, for example. But we also have found a middle ground where the financial institution, the credit union, has a variety of back-end disbursements that they want to manage more efficiently versus sending them through a wire platform or to manage those even in a check format, or may want to deliver them more expeditiously than what ACH permits. So we've built out a user experience we call the concierge payments module that allows the credit union to administer either members that walk into the branch or call the call center and go through the appropriate authentication, where those transactions could be delivered through instant payment rails, given the recipient account is eligible to do so, or for post-mortgage closing transactions or remitting payments to preferred auto dealers or other supplier payments, the credit union can manage it in a send environment for those purposes. So we're finding receive, the concierge payments helps the credit union to imagine send capabilities for the credit union in a very controlled environment, and then quickly moving into send for their members. That's what we're finding, a little more of a very organized, phased approach to instant payment enablement.
The only thing I want to add to that is the concierge model is an effective way to send money, but it also a cost effective. Imagine a wire transfer for consumers out there could cost anywhere from $40 to $50, and there's a hard dollar cost associated with that for a credit union as well. Versus an instant payment transaction could cost maybe $1 or $2. So there's a substantial amount of savings both for credit union as well as your members. So instant payment is not just a solution out there for consumers, but it's a solution for credit unions to Keith's point, disbursement of payments and offering different use cases to consumers that are efficient and cost effective both.
So as you begin to roll this out to more credit unions, obviously, I mean, you're obviously quite an evangelist on this one as well, Manal, and it's the foundation of the QSO itself. What's the best way for people to find out more?
I think they can reach out to Payfinia directly. If they have any questions, any credit unions, I've had an opportunity and the honor of speaking with several of them out there. I'd be more than happy to assist as well. But going to Payfinia directly and learning more about what they have to offer is the best way.
And Keith, what's the best address for that?
Payfinia.com would be the website, and then certainly you can provide maybe contact information for myself within the summary, but it's keith.riddle@payfinia.com if you'd like to have more of a personalized interaction regarding our services.
Great, and we'll include that in the show notes as well. Keith Riddle of Payfinia QSO, Manal Gupta, Star One Credit Union. Thanks for taking the time. It's really exciting stuff.
Thanks,
you.
man.
So as I said, this wasn't the first time I'd spoken to Manal Gupta. I'll post a link to the article that was released right about, I think, right around the 1 year mark. No, I'm sorry, even before that, I guess, at the point of the FedNow launch, about how that all came to be. We've got the information for Keith Riddle out there as well on the website. And as I say, much more to come, including, probably more conversation about real-time payments coming up in our the 2025 preview podcast that we'll be doing with the Roundtable with our friends Ann Legg and John Janklius, along with John Best and I, in the next couple of weeks. We've also got our year-end recap one coming up. I believe that'll be next week, if I'm not mistaken. So interesting stuff there. If you have your own thoughts of what you think were the biggest stories or the most significant events of 2024 from a fintech and payment standpoint, drop us a note. Be curious to hear what you think about those spaces as well. With that, we'll make it another episode of the Big Cast. Again, my name is Glenn Sarvati. You can track me down via my firm 154 Advisors at 154 Advisors or on LinkedIn. You will find the Best Innovation Group at big-fintech.com. You can check out all the different types of cool stuff they've got going on, including the Innovation Club, which I very much encourage you to take a look at. I think it's a great opportunity to stretch your R&D dollars at credit unions and really get involved in some of the most recent technologies and ideas, kind of boundary-breaking ideas in the space that we can dig into. You'll also find all our past episodes of the Big Cast under the Media tab at big-fintech.com. You'll also find us on Spotify, Amazon Music, Apple, etc., etc. Just search on The Big Cast, and hope you'll like us, whatever you do around those ways, so you can track us and keep us in mind every Tuesday when we release new content. With that, we'll be back next week with new content, as I say, pretty much every Tuesday. My name is Glenn Sarvati. It's The Big Cast. John Best is our grand poobah, and we both thank you for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.